Okay, let's unpack this. Today, we're taking a deep dive into the recent financial results of Avalon Technologies Ltd.
Right, a major player in the electronics manufacturing services or EMS space.
Exactly. And we've got a stack of their official documents here, everything from their board meeting outcomes to, detailed investor presentations and press releases.
All laying out their performance for the first quarter ending June 30, 2025.
Yeah. And our mission here isn't just to sort of recite numbers back at you.
No, definitely not. We're aiming to cut through the data, the jargon, and really uncover the most important nuggets of insight.
We want to explore not just how they performed, but maybe what truly drove those results.
And crucially, what it all means for Avalon's future, especially in this, well, rapidly evolving global manufacturing landscape.
Get ready for some truly surprising turns, I think, and perhaps a few aha moments today. Because as we peel back the layers here, it reveals a pretty remarkable story.
It really does, a story of transformation.
So where do we even begin with a turnaround like this?
Well, what's truly fascinating, right off the bat, is Avalon Technologies' remarkable leap in Q1 FY26.
Nick is right.
They didn't just, improve slightly. They swung dramatically from a net loss to a substantial profit.
Okay.
And this isn't just about good numbers on a page. It kind of suggests their business model is maturing, right? To a point where efficiency gains are now flowing directly to the bottom line. And that's a major signal, I think, for investors looking for sustainable growth.
Dramatic is definitely the word. Especially when you look at those consolidated profit after tax numbers.
Huh.
How drastically they swung.
Yeah.
They went from losing, 23 million Indian rupees in Q1 of last year
Right.
to pulling in over 142 million in profit this quarter. It's an astounding 700% plus jump year over year.
It really is.
And that, of course, had a massive impact on their consolidated basic earnings per share.
Yep, flipped it completely from a loss of 0.35 per share to a positive euro 2.14 per share. Big difference.
And it wasn't just the consolidated picture, was it?
No, that's a good point. Their standalone profit also showed really strong growth. It more than doubled from nearly 70 million to over 145 million in the same period.
Wow. Okay.
So this kind of widespread financial improvement strongly highlights a fundamental shift, I'd say, in the company's overall health.
Okay, so we've dissected that dramatic profit turnaround. But naturally, that bottom line success is heavily influenced by their top line revenue.
Sure.
What did the overall sales picture look like for Avalon this quarter?
Well, the revenue picture is largely robust. Consolidated revenue from operations grew impressively, 62.1% year over year.
62%.
Yeah, climbing from around 200 crores in Q1 FY25 to over 323 crores now in Q1 FY26.
Okay.
And both their India and U.S. businesses were key here. Each contributed roughly 62% year over year increases in revenue. Pretty balanced growth drivers there.
However, you always have to look at the full picture, right?
Always.
While that annual growth is clearly strong, there was that slight sequential quarter-over-quarter decline, about 5.7% down from Q4 FY25.
That's right. So it's not a perfectly smooth upward line every single quarter.
Which just underscores why looking beyond only the annual comparisons is so crucial,
Absolutely. And, well, this raises an important question. What really powered this incredible shift in profitability?
Right.
Because it wasn't just about selling more volume. The core of this turnaround story, I think, lies in significant margin expansion.
Exactly. Their gross margin, for instance, saw a healthy increase. It rose to 35.5% in Q1 FY26, up from 33.2% last year.
A positive jump of 230 basis points.
And for listeners, that basically means they're keeping more profit from every product they sell.
Precisely. And if we connect this to the bigger picture, the EBITDA performance was truly remarkable.
EBITDA being earnings before interest, taxes, depreciation, and amortization, a key metric.
Exactly. It gives us a clearer look at their operational profitability. And it saw a staggering 583.4% year-over-year increase.
Wow.
Reaching almost 30 crores compared to just 4.4 crores in the prior year quarter.
Huge jump.
Which translates into their EBITDA margin expanding significantly. Went from a narrow 2.2%
Very narrow.
to a much more robust 9.2%. That's a 705 basis points improvement.
And it wasn't just EBITDA improving either.
No, the profit after tax margin also improved dramatically. It shifted from negative 1.1% to a positive 4.4%.
Okay. And beyond just the margins, Their operational efficiencies also seem to tighten up.
Yes, definitely. You see it in things like their net working capital days.
Right. Those dropped from 163 days down to 142. Now, for our listeners, why is that reduction in working capital days so significant for a company's health?
Well, fundamentally, it's a clear sign of stronger cash flow.
Oh,
It means they're converting their investments in things like inventory and, what customers owe them into actual cash much faster.
right. So they need less capital tied up just to fund day-to-day operations.
Exactly. It frees up resources for other strategic things, and you also see it reflected in their inventory days.
Ah, yes, those came down too, from 118 to 104 days in the same period.
hmm Both are good indicators of a much leaner, more efficient operation taking hold.
So with these impressive financial gains and operational efficiencies starting to show, the natural next question is, what's truly driving this operational momentum?
Yeah, and what strategic moves are they making to sustain this growth into the future?
Exactly.
Well, a significant piece of that puzzle, I think, lies in their order book, which frankly tells a very compelling story right now.
How so?
It saw a robust 22.5% year-over-year increase, reaching a substantial 1790 crores as of June 30, 2025.
1790 crores. That's a solid backlog. And what's really important about that order book is its longevity, isn't it?
That's key. These orders aren't just for, next month. They're executable over an average period of 14 months.
14 months average.
Okay, and some of the long-term contracts actually extend up to 3 years.
3 years. Wow, that provides some clear, stable revenue visibility well into the future then.
It certainly does. And looking at the geographic business mix, the revenue split in Q1 FY26 was about 60% from U.S. customers. Okay,
Right.
and 40% from Indian customers, which indicates a slight increase in the U.S. contribution compared to the previous fiscal year, really showing the global strategy playing out.
While their domestic manufacturing is clearly strong, you mentioned it contributes a massive 80% of their total revenue.
And delivering impressive profitability metrics in India, yeah.
Right, like 13.2% EBITDA and 8.8% POCA just from India Q1. But there's one strategic move that truly feels different, maybe sets them apart. Their entry into semiconductor equipment manufacturing.
Ah, yes, that's a big one.
What exactly does it mean for a company like Avalon to be partnering with a global major to produce these Industry 4.0 compliant complex box build? What kind of market does this actually open up for them?
Look, this isn't just simple diversification. It feels like a strategic leap up the value chain.
Okay.
They're moving into highly complex, potentially higher margin manufacturing for a critical cutting-edge industry, producing Industry 4.0 compliant complex box builds.
Right. What did that mean?
It essentially means they are manufacturing sophisticated integrated systems that are ready for these next-generation automated factories, smart factories.
Hi.
It demonstrates some pretty advanced technical capabilities on their part, and it positions them squarely in a rapidly expanding technology-intensive market. This could be a significant long-term growth driver, I think, especially given the global demand for semiconductors.
Makes sense. And to kind of bolster their operational foundation, the company also secured some key certifications during the quarter. IPC A610J, A600K, WHMA A620E. Now, these aren't just alphabet soup, they're industry benchmarks for quality.
Absolutely.
What do these certifications specifically assure customers about Avalon's processes?
Well, these are highly respected, globally recognized standards. IPC A610, for instance, is probably the most widely used standard for the acceptability of electronic assemblies. And WHMA 620 is the key one for cable and wire harness assemblies. Earning these tells their clients, quite unequivocally, that Avalon's manufacturing processes meet the highest levels of quality, reliability, and consistency.
So it's proof of quality for assembly and wiring harnesses.
Exactly. It's a powerful statement about their commitment to excellence. You need these to play credibly at the top level.
Now, when you step back and look at Avalon's distinctive position in the broader EMS industry, it really does stand out, doesn't it?
It does. They have that unique global delivery model. They're apparently the only Indian EMS player with full-fledged manufacturing facilities in the U.S.
Right. That feels significant.
Absolutely. Their global manufacturing footprint spans 12 units across Chennai, Bengaluru here in India, but also Atlanta and Fremont in the U.S.
12 units.
Yeah, with 65 production lines running 2 shifts. It really highlights their whole build local, expand global strategy and this kind of hybrid manufacturing approach. It's a definite competitive advantage in today's complex supply chain world.
And they really position themselves as a one-stop shop for EMS services, don't they?
Okay.
Covering everything from PCB design and assembly right through to end-to-end box build solutions.
Hmm.
And it's noteworthy that those complex box build solutions, the more integrated stuff, accounted for 56% of their Q1 revenues.
Right, which signifies a strong focus on higher value integrated offerings, not just basic assembly.
This raises an important point, though. How does their diversified industry presence contribute to their resilience?
Yeah.
Because they serve a really broad customer base.
Yeah, that's a strength. They're across critical, often less cyclical sectors. You've got clean energy, think solar, hydrogen, electric vehicles,
Okay.
mobility and transportation, so railways, automotive, aerospace,
Mm-hmm.
industrials, communication, telecom, satellite systems, digital infrastructure, medical devices, and defense.
That's a wide net.
It is. And this broad diversification really helps buffer them against downturns in any single sector. Plus, it gives them multiple avenues for growth.
And it's not just their internal strategy working. They seem perfectly aligned with major industry tailwinds, too.
That's definitely helping. The global EMS market itself is projected to grow significantly from, US $880 billion in 2021 to potentially US $1,145 billion by 2026.
Wow, huge market.
And here's the thing. India is forecast to lead this growth with a remarkable 32.3% compound annual growth rate for domestic production.
32% CAGR. That's massive.
It is. Plus, you add in the whole China Plus One strategy.
Right, companies looking to diversify supply chains away from just China.
Exactly. And the ongoing US-China trade tensions. Both are actively driving manufacturing shifts towards places like India and also shoring up manufacturing in the US.
And Avalon, with facilities in both India and the U.S.
Is uniquely positioned to capitalize on these big macro trends.
Yeah, from major clients like Collins Aerospace and Favely Transport.
Think about that for a moment. These aren't small companies.
These are massive, demanding clients in sectors like aerospace and transport, saying, "You are our best." That's a really powerful endorsement in this industry.
It absolutely is. Speaks volumes about their quality and reliability in practice.
Okay, let's take maybe a slightly deeper look at their financial health beyond just the P&L.
Sure. Shifting to some efficiency metrics, their return on capital employed, ROCE, stood at a pretty healthy 17.5% for Q1 FY26.
17.5% ROCE.
Okay. And they had an asset turn of 8.0. Now, what that combination suggests is they're running a very capital-efficient business.
Right. Can you maybe elaborate a bit on what capital light truly means for a company in a manufacturing sector like this? Because manufacturing often sounds capital heavy.
That's a fair point. Being capital light here is a huge advantage. It means they're generating significant revenue and profits with relatively less investment tied up in physical assets or working capital compared to maybe older models of manufacturing.
Right.
They're maximizing the output from every dollar they invest, which is crucial for scalability, for agility, especially in a fast-moving industry like EMS.
Got it. And their debt position.
Also appears notably manageable. Gross debt was at 134 crores as of June 2025, and importantly, a very low net debt to EBITDA ratio of just 0.2.
0.2, that's very low.
Yeah. Suggests strong financial discipline and gives them flexibility, for future investments or weathering any storms.
And finally, just a quick note on employee stock options. They recently approved and allotted over 130,000 equity shares to employees under their ESOP plan,
Right, at an exercise price of Rs. 20 per share.
which incrementally increased the company's paid-up capital, but more importantly, aligns employee incentives with shareholder value creation.
Always a good sign to see. So, okay, what does this all mean when we kind of put it all together?
Yeah, the big picture.
Avalon Technologies Q1 FY26 results, they really reveal a company that's not just growing its top line, but fundamentally shifting its profitability narrative. That's the key takeaway for me.
They've astutely capitalized on market opportunities, it seems. They've significantly streamlined operations.
Yeah, those efficiency gains are clear.
And they've strategically positioned themselves with that truly unique global delivery model, India plus the U.S.
They're making impressive strides in key growth sectors like semiconductors now and demonstrating strong operational efficiency across the board.
So this deep dive really shows a company not just reacting to the market, but actively shaping its future and demonstrating, I'd say, genuine financial muscle now.
Agreed. And, this all raises an important question for us. and for you listening to consider.
Go on.
Given these significant global shifts in manufacturing and supply chains, particularly that ongoing China plus one strategy we talked about,
Right.
how might companies like Avalon continue to leverage their integrated capabilities, their global footprint to further solidify their position and maybe drive innovation not just in India and the US, but potentially across other emerging markets as well?
That's a fascinating question. Where else could this model work?
Exactly. It's definitely a fascinating space to watch evolve from here.